Well, we mentioned the Treasury trade. Another clue, though, that the market is betting those economic green shoots are wilting. The safety trade is back in. Investors are scooping up long-term debt backed by the U.S. government. Our Dakin Campbell has been reporting on this bullish shift toward Treasuries. Good afternoon.
Good afternoon.
So let's talk about the rally in Treasuries. Despite all this new demand, new supply coming on, we are seeing some significant moves when it comes to Treasuries. What's behind it?
Yeah, Treasuries, 10-year Treasuries have fallen about 70 basis points in yield over the last month or so. That's basically been because of, as you mentioned in your lead-in, the fact that consumers, investors are growing concerned that the economic recovery might not have the legs that they thought it was going to have a month or so ago.
So skeptical about those green shoots.
Very skeptical.
All right. So in terms of the demand into Treasuries, and as I mentioned, we had a lot of auctions last week. Where's all the demand coming from? Is it foreign investors or who's buying?
Yeah, it's coming from all over the place, actually, which is a good sign for the Treasury market. It's coming in the story that we wrote today. It's coming from domestic investors. Big ones such as BlackRock and Franklin Templeton. It's also coming from foreign investors, kind of a class of investor that we've been concerned about over the last couple months might turn their back on the Treasury market. They have been coming into the auctions over the last couple weeks very strongly, and we saw them buying 2- and 3-year Treasuries several months ago. They're now moving into 5-, 7-, 10-year.
Those longer durations.
Right.
Dakin, you mentioned at the start of this, you talked about the 10-year specifically. Certain maturities benefiting more than others in terms of the trade we're seeing?
Yeah, it's a good question. You know, as I mentioned, foreign investors are moving out the duration spectrum, and domestic investors are as well. So one part of what we've been looking at is the yield curve, the difference in yield between 2- and 10-year Treasuries.
Right.
And we've been seeing 10-year Treasuries rallying much more than 2 years. So longer durations are benefiting from this.
All right. And what are investors that you speak to? What are they kind of saying here at this point?
They're showing a lot of concern about the economic recovery. They're looking at the unemployment rate heading towards 10%.
Right.
A lot of people are saying it's going to go north of 10%. They're looking at the University of Michigan Consumer Sentiment Index, you know, reversed 4 months of improving sentiment to turn more negative last week.
5 seconds, though. Can this rally go further in your view, or what you're hearing, just quickly?
Yeah, 10-year Treasuries may go to 3%, many people are saying.
Oh, interesting. We'll watch those levels. Dakin, thank you so much.
Thank you.
Bloomberg News' Dakin.